So we would travel to China and basically sleep normal West Coast hours and wake up in local China time to watch the opening bell at 9:30 p.m., trade all night, help these traders, and then go back to our hotel about 4:30 or 5 in the morning and sleep the morning off, only to wake up and maybe spend a little bit of time in the afternoon with some sightseeing. But because of that, the reason I bring that up is after about 6 or 7 months of doing that, we realized when we were not overseas with them, we could use desktop sharing. It was just becoming popular back then. We're talking WebEx and GoToMeeting. So we stayed in contact with our traders. Well, when that contract ended and we all moved on, we decided this was really a great idea to just open up desktop sharing for instruction and teaching. So from about 2008 to 2011, we did open desktop sharing and had a really cool, fun service. Matter of fact, I see a lot of familiar names and still talk to some of the people that are in the live trade ideas room that were once in our room back in the day. And then after that, we signed up with Ditto Trade as a pilot program, which was a technology that allowed people to open up an account and basically tie that account to our account at the same brokerage, which was Ditto. And behind the scenes, whenever the lead trader's account, which was ours, made a trade allocation, the people that had signed up and paid for that service and basically entrusted their trading to us, they participated. And it was a really cool technology because every time a trade was taken, everybody that wanted to participate got the same amount of shares that they wanted percent-wise, and we all got the same price, so there was no slippage. It was one big block order that went into the market. It was pretty cool. And much like Holly, like we talk a lot about, the traders could either ride along with us, or they could detach the trade, like we always talk about with Holly, doing a trade around. And we're going to talk about some of those going forward. So that's the background on Andy. He and I have been together for a long time doing this. So coming in here tonight to speak to you guys, the two of us, is really old hat to us, and it's kind of nice to be back in the seat. So with that said, this slide real quickly is just a reminder that Trade Ideas really does a great job onboarding people, holding their hands, creating a valet service, whether it's the real trading room here, which you can see this is an old slide. Actually not, it's an old slide. It's been updated. It's at 299 online participants. I think we had about 380 in there today or yesterday. So this continues to grow. It's a free room, and people are obviously seeing the value of coming in and being able to not only interact with other great traders in there, but interact with Barry and see how he uses the product, ask questions, get some feedback from Barry, and more importantly, most usually, get the actual trade links, the code links to see, so you can share the exact same alerts and multi-strategies and top lists that you are seeing on that. So in addition to that, we have many webinars, including the one you are attending right now. We have office hours with myself and Jamie on Mondays and Thursdays. But Jamie is also out of town this week. He and Barry decided to pick up and leave. So, Andy and I will hold down the fort along with Brad and continue to make sure that we honor these commitments. And then lastly, whenever you do subscribe to Trade Ideas, you're eligible for a one-on-one training session with any one of us here at Trade Ideas, where we can really sit down and hone your method and find out what the best way for you to use the Trade Ideas platform. Real quick, let's just look at the agenda for tonight. Nothing special, just kind of the same thing we've been doing week by week. We do want to do a market recap, give my 2 cents, and even ask Andy what his 2 cents are of where we are in the market. As usual, we'll talk about some Holly trades today, recap, and also some new features that are coming very soon we'll talk about. There's a screen in Trade Ideas that I actually just learned about, and I think it's wonderful to share with people who are brand new to the program. It's called the welcome screen. I'll spend a few minutes on that and showing the value of that. And then, of course, getting to the title of our webinar, Trade of the Week Recap. We'll talk about the trade of the week, how it was selected and how it managed. And we'll also remind you of some of the open trades of the weeks that are still intact, and maybe even look at a couple levels of interest on those as well for those people who still may be having an open position in those. Towards the end, I got some great feedback on a webinar I did 2 weeks ago on backtesting and optimizing. And so for those of you, I think we've got a lot of new people in here today. I'm going to go over that again. For those of you that saw it the first time, well, you can, sit around and try and gain some more knowledge, but we're going to go through that again. And then time permitting, as we always do, we're going to go through a few trade setups and set our price alerts and talk about the virtues and the value of setting price alerts. So as Scott said, the majority of the people in the room tonight have taken on the premium Trade Ideas subscription. So setting price alerts should be available to most of you. And then the neat thing is,
it's 85% of the half that are subscribers have that. So it is the majority of the subscribers. Just make
majority of subscribers.
Point clarification. There we go.
Thank you.
I thought those numbers didn't add up. Yeah, I was like, wait a minute. Okay, that makes sense now. Okay.
But nonetheless, for those of you that do have it, we will always finish up the webinar with the sharing feature. So anything that was set here as an alert can be collaborated and shared and dropped into your price alerts. So if these do trigger and you have a copy of them, we all see them at the same time. Okay, so that said, that's kind of what we got in store for you. Let me expand my daily chart here, and I'm going to go to the SPY. Let's see if we can glean some more advice or some more things here. Now, this is a line that I left in, it looks like 2 weeks ago, the last webinar that we had. And I mentioned to you that this downward trending trend line was probably more likely to be broken, kind of like a bull flag. And we did have that. And since then, it's just been nothing but the bulls in charge. You know, we can talk about, you know, what Yellen is saying, no rate hikes. We can talk about the horrible labor report we had last week, which is this day right here, and you can see once again the bulls got spooked a little bit. The bears got excited, but once again they just came back in and pushed us back up. This has been the story just forever now. And so when we zoom back out, we're basically back in kind of a no man's land because we did clear this level, which I will be happy to mark up with a horizontal line. And as you can see, we are above that level. That's the level we were talking about as the next level of resistance. We hit it. We pulled back a little bit yesterday, but right back through it again today. So where does that mean we're going next? Well, we're kind of in this little margin here. I'm just going to go ahead and drop in another horizontal line, which I believe is about 213.25. So we're in this little alleyway here, but if I zoom out, you know, beyond that, we really don't have much more to go before we're talking about all-time highs again. And again, I try not to get caught up in the fundamental chatter, the economic data. We just try and focus on the footprints in the sand, what the herd is telling us, and they've been telling us that every attempt at sell-off has been rejected, and we just keep pushing higher, and that means that the market is going to want to continue, in my opinion, not making a prediction, but my bias is not short. My bias is a continued drift higher until we run into these resistance levels up here in the spiders. Did you have any thoughts, Andy?
No, you're studying it very well. I mean, it's so tempting, you know, to want to fade this market. It really is. I mean, because the volume is anemic. I mean, I think yesterday was the lowest volume of the year, and if today didn't eclipse that, because it was once again anemic. And but Steve's right. I mean, there's no reason to fight the tape right now. I mean, volume doesn't matter. You hear like our friend Brian Shannon say this all the way, you know, price is what matters, you know. So I'm not in the camp that we're just going to bust out and just continue moving higher, but at the same time, you know, especially if you're swing trading, you know, day trading is a different story. You come in each day, like today was pretty apathetic, even though the market was up. It was, like I said, the volume was anemic, and you just look for opportunity in play stocks. But yeah, you hit it, Steve. We're in that range. Every time we poke through this 210 level over the last 2 years, we haven't lasted very long, and we come back down. So we'll see. Time will tell. But I can hear arguments from both bears and bulls, and you know, footprints in the sand looks like we're going higher, but you look over the last 2 years, and we have not been able to maintain this level. If you scroll back, you'll see, Steve, every time we poke through, we pull back. Every time we poke through, we pull back. So time will tell, but no use fighting it for right now because it is a bullish tape.
Yes. Yes, sir. So the bias is still to the upside. We'll see where we go from here. We're not in the prediction business. We're in the reaction business, and chance favors the prepared mind. So let's look at how we can use trade ideas to favor the prepared mind, because this is a great tool. We would not be associated with this company if it was not such a great tool. It's a very powerful tool, and there's many different ways to use it. But we're going to try and simplify it again to show people how to try and extract some alpha that may not normally be seen or talked about on TV. The idea is we all want to make money in the market. We're not Warren Buffett. We're not getting the special warrants of Goldman Sachs at a fire sale. We're not Steve Cohen. We don't have channel checks out there and insider information to trade off of. We got to do it the old-fashioned way, and these tools are great tools to try and show us where the alpha is. In addition to these tools, if you're not in the live trading room, I don't know why you're not, because we are in there finding the alpha every day and discussing it, and there's a lot of good stuff going around in there. So again, if you haven't been in the live trading room, I highly recommend it. All right, and then just real quick for those of you that are new and not really sure who's talking here, I dropped my bio, my Steve Gomez bio in the chat window. You're welcome to look at that at any time. So let's get started. Before I go to Holly, I did want to just remind people, when you first onboard at Trade Ideas, it's a blank canvas, and unless you know how to go in here immediately right away and start making configurations and what alert windows are and all this stuff, it can be a bit daunting. But there is a unique little feature here. It's called the welcome screen, and you get to it by going to New and Welcome Screen. You may not even have known this, Andy, but
no, it's new to me.
Exactly. And so this is something that's a real easy onboard to try and show you graphically in a better fashion just exactly what you can do from a starting point. And again, these are all of our channels, which are exactly the same as the channel bar, but you can locate and access those channels directly from there. We also have the Strategies tab, which basically talks about the three different types of tools: the alerts, the A windows, the top list, which are the T windows, and the multi-strategies, which are basically numerous A windows crammed into one window, multi-strategy, to save time and space and efficiency. But if you go into a few of these, you can see there are some nice preset things to look at. So maybe we go to alerts. We've got some neutral alerts, some bullish alerts. These are pre-configured things that can kind of get you going and double-click into them and immediately see here is a great description of what this alert is looking for and some of the filters being used. And if you wanted to launch it directly from here, you would do so just by clicking that launch button. And for those of you who are not adept at using the back tester yet, these are great ways, great templates, I should say. You can come in here and grab an alert window, because we can only backtest alerts. We do need a timestamp and a price stamp to grab those data points so we can have that be used in the backtesting module. But again, just real quick, this is a great way to come in and see some of the pre-configured alerts, and you could even go in and backtest some of these strategies. I'm not going to waste time on that at the moment, but I do have a backtesting example again later. But for those of you who are not aware of this, this is a great way to just kind of get started in a more graphical, user-friendly way. Some of the tools that we offer again as well are explained, and exactly what the differences are between those tools. We see a lot of times a compare count window. The easiest way to launch the compare count window is just to come right here and go ahead and launch it. And this is a great window to observe when the market opens, and keep an eye on it in the first 30 minutes to see exactly who's winning the tick race. Are the upticks winning or the downticks winning? Are the buyers with the surge programs winning, or the sellers with the surge programs winning? It's a great way to kind of give you a feel. So that is that for the welcome screen, because I don't think a lot of people... You right over there, Andy?
Yeah, no, I'm fine.
Okay.
That wasn't me. That wasn't me.
Oh, it must be Scott. Let me mute.
Muted.
There we go. You muted, Scott. All right, so welcome screen, a great simple user interface for newer traders to just kind of get your feet wet. And let's go ahead and close that, since we're not going to use that. All right, let's move on to Holly now. Today was an interesting day because I have not seen Holly actually cross the threshold back and forth from positive to negative this many times in one day. What does that signal? Well, that kind of gives us a cue that this was a chop fest difficult day. I did a trade one-on-one session with a guy today. He's like, boy, am I glad to take my hands off the keys today. This has been wicked. And I showed him in this, and he kind of laughed and he agreed. Yeah, that's a good point you got there. But let's go ahead and take a look at what happened today, because this negative 54 cents, it really doesn't tell the story. There are other ways to try and dig in to what's going on, and we've got some examples from the live trading room today. The first of which I want to highlight, we talk about trade arounds a lot. Trade arounds being watching Holly after there's been an exit for a possible re-entry, and this was the best example of all today. And again, it was mentioned in real time by Dan Merkin, the CEO, in the live trading room. He reminded everybody, hey, keep an eye on the closed trades, because this particular trade, SIG, was closed out for a 49-cent loser, and as you can see, the stop was hit. Holly was doing her job, managing our risk. You will never see Holly take a giant trading loss. Okay, there's always going to be solid risk management. But what we've been doing in the live trading room is, once these positions go to the close category, we pay close attention to this non-exit profit column. And when trades that were stopped out tend to reverse and come back to the entry area, we talk a lot about reminding people to set price alerts or keep an eye on these trades that were stopped out, because the statistical value is still there. The trade is still today's trade, and the values that Holly was crunching numbers on the night before are still valid, even though she got stopped out for 49 cents. Let's take a quick look at this particular trade around, because this was SIG today. The trade was taken here at this blue arrow, and this blue for whatever I want to call it, marker on the side indicates the 86.81 entry price. Well, Holly did a very good job of maximizing or managing our risk, I should say, and this particular trade had a stop out at, where'd it go? I think I need to pull this up a little bit more. Here we go. 49 cents was the loser. Holly booked that negative 49 cents, and that goes into the P&L over here, and it goes into the total performance that Holly has, because we have to compare her to something. But as I mentioned, Dan Merkin was reminding everybody in the room today that this particular trade, and we can see here, was stopped out by about 20 cents too soon. The risk reward right there at that red level 86.32 was employed, and the stock went about 20 cents lower. And then as it reversed and went back to the original entry point at 86.76, 86.81, excuse me, these are the types of trades where we try and keep an eye on, and if they turn and go positive based on the original entry point, it's a good idea to consider a trade around, as we call it. In other words, playing off of Holly's pain can be our gain. And so again, in real time, the virtues of being in the trading room, this was being discussed. And this was a great example of how the trade arounds can eventually work, because $2.72 really was the total alpha at the end of the day when all the smoke was cleared. This was the real alpha that we really should be calculating, but we're not, because we tie one hand behind our back. We got to get out. We have to adhere to our stops. But again, playing off Holly's pain to make it our gain, sometimes a very simple way when a stop is hit, you'll see us in the live trading room go in and set a price alert back to the original entry point. So we could essentially go in here, create a price alert, and then just call it a Holly trade around. And then if the trade comes back and triggers that, well, that's basically 2.0. It's Holly Trade 2.0 on the same stock. And we do this all the time, and Barry does this all the time. And today, Andy actually had an example, being the trading moderator today. This occurred in UNIS, UNIS. And I want to show you something else here. This UNIS had a decent day, but Holly booked 9 cents. But that's not what was on the table. I want to call your attention to this max profit. And if you don't have this column enabled, this is what really can show us what type of alpha was generated. It's just a matter of how you traded it. So real quick, if you needed to get that maximum profit column, you just right-click, go to columns, and then locate it in here, and then bring it over. But what this is showing us is, here was the entry in UNIS. Matter of fact, you want to talk me through this trade on how you handled this one, Andy?
Well, yeah, I think you may be getting confused with SIG.
Yes.
This is the one I didn't get my full feel on. It was a nice it was a nice, actually. This one was a nice 25-cent gain, but I think I didn't get my full feel, so I only had a small amount of shares. But if you'll go back to SIG,
sure.
Yeah, because this is one where this was actually a little bit of patience and a little bit of luck here, because if you actually pull up the daily too as well, because this is what I was telling him in the trading room. First off, look at this thing. It's pulled all the way down from 125, and down to $85 range. Huge pullback. Okay, then you finally have a bar reversal day. And if you're going to take a trade like this, I mean, basically, you're in theory, you're not catching a falling knife, but you're really taking a big chance on a bounce here. And if you're going to have the guts to do that, this is not one you want to take and then take 25, 30, 50 cents out of it. I mean, you're looking for a move potentially back up to the 95 area at least. If you can get through that. There's just not a whole lot of resistance there. This thing could bounce, up to the 95, and who knows where it goes from there. Now, if you'll go back to the intraday, Steve. So what I did in this one right here is, and like I said, it's kind of a stroke of luck too, man, because I bought this, I believe, it was in the high 86s, maybe even 87. But I bought small enough size because I knew this was one, I'm going to want to hold. If it pulls back 50 cents on me, I'm not too worried about it. But I had to take my daughter to school. And around the time it was near lows, and I said, I never like putting stops in, tight. So luckily I put my stop in below 86. And because, like I said, it's kind of a swing trade position. So I didn't want to, just get wicked out. And so kind of a stroke of luck there, because if I had been watching it, I may have just punched out of it. But I put my stop in below 86, and then I came back, and it was close to highs. I scalped out of that move. I probably scalped out about a half of it, and still hanging on to it, looking for a move higher to that area. Because like I said, if you really need to hold on to some of this if you're going to take a chance on a chart that looks like that. If you're just looking to scalp, 20, 30, 40 cents out of a stock, find something with momentum, and like AMBA today. If you'll pull up AMBA real quick, find something like AMBA, that's just strong, you find something like that and scalp it out, but because like Dan was saying, this SIG, in another 3 or 4 months it could be back up to 125.
It's funny you mentioned AMBA, Andy. If you can see, I actually have a pullback alert on that one. I've got a red dashed line in there. I didn't want to chase it, but I did want to notice it if it came back to a pullback. But going back quickly to the SIG, the first thing we always got to do, guys, is start with the helicopter back up high and then zoom in. So start by looking at the daily chart. Andy is correct. You're not going to get anything just looking at this and saying, okay, I'm going to jump in. You really need to put your trader's hat on and see, where has this stock been, where could it be going. And one of the things that's really nice are these last 2 days down here. You see the bulls fought back and pushed the price back higher off lows, those bottoming wicks, as Barry likes to call them. Also, I think gives very good credibility to the way this daily chart was setting up, and then getting above yesterday's high just was a good deal. So let me just try and put these back into their cubicle. And again, what I want to point out is, and what Andy just said is great, and some of you guys might be saying, oh, that's great hindsight talk. This wasn't hindsight talk. This was happening in real time. Oops, I reversed them. I want this one over here. This was happening in real time in the live trading room. So again, the virtues and the value of being in the live trading room, this kind of stuff is happening in real time. But what I wanted to show you is, let me go back to profit percent. Okay. So these two stocks up here, SPX, UNIS, we just talked about. But UNIS, it had a nice move. Look at this column, 23 cents. Now, what Andy does and what Barry does and a lot of good traders should be doing is kind of piecemealing out as you're getting your movement, all right, in case you do get a pullback. There's a great saying, sell when you have to, sell when you can, Not when you have to. It's like a buyer's market in the housing market. As the price is going up, you can start to dish out and feed out to the monkeys, and get the price on your terms. Therefore, when we get these reversals, at least we've got some profits off the table. So that's why I call your attention. This thing ran 23 cents, which on a $3 stock, I think it was up 11 or 12% at one point during the day. Even more so for specs. This one was also traded by Andy in real time. Not only that, it was a Holly call, so everything lined up. Holly spit it out. It was a great opportunity. There was a time lag there where those shares were available, the spread was thin, and you could get in. And look at this. This thing actually had 39 cents of alpha at its peak. I mean, we're talking about a stock that basically broke out at 260. Holly called it at 266, and this thing traded up above almost to 310. So this thing was up almost 18% at one point. So if you are the trader who's dishing and feeding this out, like Andy demonstrates, like Barry demonstrates, like I like to do, like most traders like to do, these types of pullbacks don't sting as much when you've got some good sales off. But the point being, Holly only took a 9-cent winner in this, when in reality what we had was about 39 cents or about 18% alpha that you could have worked with as a trader going forward. So I wanted to highlight that. Now I want to talk a little bit about what might be coming forward. If anybody was in the Q&A webinar today with Brad, Brad showed you a glimpse of a secret server that's testing a different version of Holly. And when I mean different version, I mean this type of stuff is no longer going to be acceptable. Nice alpha, only to return and give it back. So there's going to be some sort of trailing stop mechanism that has time decay that's going to try and lock in profits more, because the last thing we want to see Holly do is create some really nice alpha and then just write it back down because her time stop is expiring. We're going to be modifying that. And I can tell you when Brad did pull up, if you guys all saw it yourself, when he pulled up today using the test server, which had different risk management proportions, as I just mentioned, it was a positive day by about 55 or 60 cents. And that's the way it's been going lately. So we're really excited about some improvements coming forward in the risk management of Holly, trying to get her performance up and do better. But in the meantime, I just want to remind you guys, this is alpha here, 39 cents on a $2.65 stock, 23 cents on a $3.84 stock. This does not always tell the picture. The picture that this did tell today is a lot of back and forth and chop. So that being said, I want to move into the title of the Trade of the Week webinar, and I want to talk a little bit about what happened in the Trade of the Week. So let's go to the daily chart, and we're going to bring up OUTR. OUTR, if I could type. Now I quickly want to remind everybody why this was chosen. This is not the chart. I want the daily. How did I get on 1 minute? Huh? That's
no,
crazy.
yeah, I thought I noticed that. Yeah.
That must have been wild. Let's go to time frame, back to daily. Okay. The trade of the week was picked as it broke above these levels here. Yes, it had a lot of run, but here's the contra to that. If we look at this, short float 69%, okay? If we look at the float, 11 million shares, this is a recipe for unbelievable face-ripping, short rallying, short squeeze rally. We didn't quite get the move we wanted, but the lesson here is in the downside risk. This was a nice move extended, and it could have easily continued to extend based on the metrics that we identified. Here's a stock making $2.75 a share. The shorts are unbelievably piled in at 69% on a low float. As it were, after these few days, and after it cleared this high, the shorts probably were wigging out a little bit, and this trade just could have easily ripped another 5 to 10 points, but it didn't. And I recall writing in the Trade of the Week email, please, this is a very liberal stop. We've got to give this one a little bit of time to work because it has had some run in it. So I just want to quickly pull up the methodology behind where the stop was placed and why. Stop was placed at 42.60, and basically the article was written right here. And if we look back, the obvious level to put a stop may have been like right here at this little higher low. But I wanted to go a bit deeper and put the stop down here at this congestion level just below that, because the thinking being, if it takes out this level, it's probably got a lot more to go, and we don't want to stick around and see if it's got it. So when we see these types of trades with some liberal stops, I remind people all the time, figure out what your max loss is in dollar amount, and then you size your shares accordingly based on the entry and where the stop is, and those share sizes should basically equate to your maximum stop, so you know what your risk is. But as we can see, the trade did not work out. The stop was adhered, and since the stop was triggered, sure enough, it did go much lower. So this trade was broken, but risk was managed at an acceptable level. And again, looking at this 15-minute chart, I could have put it below this congestion, but I felt that might have been too tight. And as you can see, look, lo and behold, we did test it the following day, bounced right off of it. The following day we opened up. We see a lot of these opening day drives where they try and run the stops. Didn't quite get there. I really thought, guys, that after these 2 days here, we had built ourselves a nice little base. But for whatever reason, this is trading. They don't always work. It rolled over, and this is really where it technically broke down. So we had to cut our losses. Now, with that said, I want to remind you guys, there's still some trades that are open. Pandora has been one of the better trades of the week. And as you can see, this was the entry down at Pandora, which you cannot see on this chart yet, coming to be soon, though, are moving averages. This really kissed to almost to the penny, the 200-day moving average. So that technically, in my opinion, was the reason for a bit of a pullback. And, you know, after this kind of a run, this type of pullback is genuinely warranted and acceptable. What I'm doing here is I'm trying to maybe reload on Pandora using this red line as a possible pullback. There's a little minor gap in here, and some prior resistance could become future support. So I have an active alert in my price alerts for Pandora, and it will alert me if we get back down here. And ideally is to play off of these people's pain that bought up here after a big long run and held on and got stopped out. Okay, another one that is still
Can I
open.
add something to
Yes,
that?
please do.
Well, no, I was just going to say, you know, when you get a move like that, I mean, in a market that's pretty much been in a range for the last 2 years, that's what you got to tell yourself, especially when you're swing trading stocks. Okay, it's been a range-bound market, which means it's been ebbing and flowing for the last 2 years, basically. And when you get a move like that, I just calculated it's probably about at least a 10% move, didn't it? Basically go from like 10, 20, 11, something. But yeah, you have to.
14% actually.
You have to take some. I guess you don't have to, but it'd be foolish, you know, not to bang out some profits, you know, just and then start playing with house's money. And then, but who knows? You bang out some profits, and then if it comes down of that line that Steve, which is a very good place for a potential bounce, then you can reevaluate from there and potentially maybe reload back up should it come down to that line, stabilize, and start moving back higher. But until this market breaks out, you know, I think you still have to stay in this range-bound mode, and when you get 8 to 10% moves, you know, ring the bell at least on a portion of it. Yes.
Yeah,
okay.
and it does wonders for your psyche too. You know, we all fear that the price that is a winning trade is going to pull back on us, and a winner is going to turn into a loser. That's our fear. Our fear should actually be that we're going to miss out on higher alpha. So sometimes selling half at certain levels of technical importance, such as this was, again, for those of you who have moving averages, 200-day moving average pretty much was right there, and I think that's the reason that triggered a bit of a reset for a pullback. So again, we're going to talk about price alerts. Let's just pull up my price alert here real quick, because as I've mentioned before, I try and refresh and clean this thing out every month. And so this is my June price alerts, and I've got a positive P&L, which is great. But you can see my P alert right here is working, and should it trigger, I will know in real time, and I'm not going to miss it. And it'll pull up, and I'll see what the market's doing, see what everything's going, and make decisions based off that. So the price alerts, again, for those that are not familiar with these, this is part of what we call the Holly Trinity. You know, whether it's the AI spitting out ideas or some of our top list or some of our multi-strategies, we can use these to our advantage to find interesting levels of possible entry, and basically right-click into the chart and set an alert. As you can see, these alerts are still working, and these alerts have triggered. But the most important thing is the triggered alerts are giving me feedback on the positive P&L that what I'm doing and where I'm setting these alerts, I'm getting follow-through, I'm getting continued movement, albeit not all of them are winners, but the majority of them are in the money. Matter of fact, this one right here, MIK, was a short. This is actually working pretty well too. So, going forward, if you're not using this price alerts and you have the ability to use it with the TI Premium, you really should be using it. There's no excuse not to. It's a great teaching tool, especially for newer traders, because if you start setting alerts and they're triggering, and you look up here and your P&L is negative, well, maybe you're this guy that's buying all the time right here after a big move. Okay, so that's Pandora, which is still open. The most recent one is Twitter, which is also still open. Nothing really going on with this one except some sideways consolidation, and of course there's nothing wrong with sideways consolidation. It's actually a better way to consolidate over time versus over price. We don't want to give back too much price to consolidate. And again, look at this floor. This floor at 14 here is just about as solid of a floor as I've ever seen. So in my opinion, I think Twitter is probably secretly shopping themselves, and if anybody out there like Apple or Google has any sense, they can probably look at this chart and realize, right, this is probably about the bottom level price that we're going to get. Maybe we should start having M&A discussions. But nonetheless, Twitter is still active, and just so you guys know, I would be using, what do you think about this, Andy, the bottom of this wick right here for a possible stop out, because we have already proven that this wick can withstand that point. Currently,
like that.
Yeah, currently the stop is down just below 14, but considering those that maybe want to try and reduce their risk a little bit, there wouldn't be anything wrong, in my opinion, with putting something below this wick, because if the price comes back and tests the low of that wick, that downside wick, then the trade is kind of broken again.
Well, so you get to you can see that the bottom of that wick correlates well with the tops of the prior wicks in front of it. So. Yeah, it should hold that level. I mean, if not, give yourself a little wiggle and jiggle, maybe 5 or 10 cents. But yeah, that should that level should hold. Below that, it's in no man's land, and it could go test lows again. But yeah, that's a safe out.
Okay. And then another one going back to, I think, May 9th, trade of the week was Clean Energy, CLNE. And this one's been kind of a sleeper, because what happened was the trade was taken after this long day, but the price, you want to remind me what the price stop was? 270, Andy? Was that correct? It was 270?
Yep, 278.
Okay, so this low right here is 289. This trade was never stopped out. It just required some patience. Look at what we've had since then. Okay, let's take a look at where we might be going on this particular one. See if we can see anything of interest. Yep, there's something of interest right there. This is what we say all the time, guys. Look left to find out where we came from. All I have to do is just pretty much drop in a horizontal line. You can see what was prior support became prior resistance, and is now still current resistance. So CLNE, if any of you out there are still in this trade, bravo for your patience and your fortitude, but these are the kind of levels like Andy and I just spoke of a minute ago in Pandora where you got to ring the bell. And these are the technical levels when you look back. This makes sense to ring the bell here. Using a trailing stop, to try and raise our stop and keep our protection in place, I think you just probably move it to right here. What would you think, even higher, or what's your opinion on that, Andy?
I think 350 is a critical level, and once again on something like this, if you took some profits and you're playing with house money, I just know how algos work, and we'll try to shake people out at those 50 levels in the hold numbers. So, if you want to give it to 340 below 340, because so many times I see them come down and shake the trees just to 347, 346. But this is one that I can speak firsthand because I did trade this one. I did swing trade this one, and I have to admit I sold all of mine yesterday in the mid-90s, but it's one that Steve's showing that area that I may look to get back in with. When I swing trade, I look for if I get a nice 10-15% move, I take it. I take it until this market proves to me otherwise that it's not range bound, and I could leave something on the table. It can go back and break through 4, but I got out at a point where I could turn around and buy it back.
Yeah, let's talk about that. Let's set a pullback price alert. We don't want to go short because we're looking for a pullback, so we got to code this long. And we always remind ourselves, PB alert means watch price action to see if bidders do step in. They could very easily overshoot these levels, but you want to see a stabilization of price and strong bid at these levels. We're going to go ahead and set that for an interesting possible pullback price alert going forward. So that is the couple of trades of the week that are still intact, and the reason for this week's current trade of the week that was stopped out. We've got enough time again to back test the revived what I call the horseshoe up. And going way back, this was the very first alert I asked Dan to design when he came to me in 2002 and said, hey, what do you want to see? I said, I want to see an alert that shows stocks gapping up, pulling back after the gap up, trying to fill the gap, but then turning in the middle of the gap and then moving back to highs. And as soon as it goes back to highs, I want to know. And this is in theory kind of like the RBI, red bar ignored. You have the sellers trying to step in and take a chance, but they get run over. And when you identify that they're getting run over, especially on a stock that's gapping up, there can be some decent follow-through. Now, as you see, actually no alerts came through today, and that's fine by me. I like it like that. I like my alerts slow and sloppy, not fast and furious. So there was a lot of great feedback from 2 weeks ago, and not only the great feedback is the reason I'm going over this again, but it's a constant reminder that we need to stay on top of strategies, because strategies will work and then they will fail to work. I can't tell you guys how many times this horseshoe alert works like a gem and then it goes to crap. So let's just back test it again here and see if it's still working as well as it was 2 weeks ago. So what I want to do is quickly right click for the back test. Oh, and I want to show you guys something. There is a awesome filter in here because I want to let this trade develop. And in order to let this trade develop, we have to kind of set some time parameters on it. So there is a filter that we use called, let me hide unused. Let's make it easier. Time of day, and this is expressed minutes after the open. So very simply, I'm saying I don't want to see this alert until at least 30 minutes after the open. After that, bring it on. Let's take a look at it. So with that said, that's kind of the theory behind it. Let's back test it. And we will start off by kind of opening it up at 7 o'clock, which is my 10 o'clock East Coast time. This would be when the first alerts actually come out with our 30-minute delay. Let's take it up towards near the close. Timed exit, I'm going to keep it as it has always been. This is a decent all-day hold to sell at the close. And of course, that doesn't mean you have to sell all of it. If it closes on highs and the daily chart looks great, keep half. Satisfy both of those demons. The risk management, I'm always using a percent. I'm always back testing with risk 1 to make 3. Advanced, I've got this thing cranked up to go all the way back, all 64 trading days, which is actually about 1/4 on the calendar if you include weekends. So here's our summary. Initiate trades between these times, hold for the whole day, and risk reward. So let's go ahead and simulate and see, since we ran this publicly last time 2 weeks ago, if we still have a viable strategy here. And based on the thumbnail report here, it looks like it's doing okay because this thumbnail is showing equity growth from lower left to upper right, which can help sometimes if it's a slow back test and you see it going down. You'll know that it might not come out okay. Well, here's what we got. We got 170 trades over 60 days, so that's averaging over 2 trades a day. Only a profit factor of 1.63. We really need a profit factor of 2.0 or higher because that means that's where we start to get traction. For every 2 winners, there's only 1 loser. A profit factor of 1.0 is just a coin flip. Every loser is covered up by every winner. But only 46% win percentage, nothing to write home about. But decent risk average winner, average loser, 27-cent winner, 15-cent loser. So we can do better than this. And then again, the educational takeaway here is how to optimize. Just because this is what we ran doesn't necessarily mean that that's the gospel. We can dig in a little bit and see what's going on by the optimization tab. Now, I've already optimized it. I'm running my price levels from $5 to $49.99. I've seen some testing that comes above $49. Some of the prices start to not do as well. But time of day is a really interesting one here because we can take this and look at this and say, well, okay, at my first Pacific Coast time, 7 to 7:30, was nothing. Horrible profit factor, a ton of trades, negative return. Okay, so this probably means to me that this trade is not having enough time to develop between 7 and 7:30. We got to kick that. We got to kick that portion out of there. So if we go forward, we got some decent green. Yeah, we've got a little bit of a hiccup here, but only 7 trades. But coming after that, we've got some nice profit factors, some nice returns. So in my mind, looking at this heat map, like a nice steak, let's cut the fat off the top. Let's cut the fat off the bottom and rerun it. So we're going to rerun this from 7:30 to 10:29. So we simply click run again, We adjust our time, 7:30, and we want to stop at 10:29. And just this one little exercise here to find out when the sweet spot of the day actually is, kicks back some really interesting results. Dead air. We're almost there. Okay, let's compare summaries. Look at what we did by just that one little tricky tweak of finding the optimum time of day. We took 170 trades and turned it into 73, so a little more than one trade a day on the average. That's why you guys didn't see a trade in that window today. There's just nothing happening. 61% win percentage versus this paltry 47%. We took our profit factor and doubled it from 1.63 to 3.57 with just one simple little adjustment over time, using the optimization to go in here and find out what works best. And we can even take it a step further and go into other filters and try and find out, well, of the stocks that gapped up, because they all had to gap up, which ones seem to be performing the best. Well, nothing really showing up here because a little bit of an anomaly here at this level, but beyond that level it's still good, so we don't want to cut that out. So we'll leave the gap percentage as it is. What about the 15-minute range? The stocks that are moving a lot in their 15-minute range, we can also try and optimize by that as well. We can optimize by just about anything we want. Relative volume. Well, it looks like there's a pretty good green heat map here, not much more to do. And I've gone through this a few times, so I actually know that really the best optimization for this one was the time of day. And you can see once again what it did, taking our profit factor and doubling it just by that one simple little back test and look. And again, this is what Holly, the AI, is doing every evening on this exact same platform, but doing it automatedly to the tune of about 1 million trades, much more than we ever could do. Yes, David, you can have the link to the horseshoe. I'm going to go ahead and save this to the cloud, and I'm going to drop this in the chat window, not the question box. So if anybody's interested in having this, and once you've seen now what it is, what it does, you've got a better feel for maybe why you might want to have it in your repertoire. So I'll go ahead and paste that into the chat window under my bio. And real quick, before we get to marking up some trades, I want to show you guys that this one's working good right now. But at any given time, you can take like the trend change lubricant that works also well for us that we've talked ad nauseum about, and you can flip these suckers and do the exact inverse and just have trade ideas give you the inverse. But what we can see right now is the inverse of the trend change is not working very well. There's not a lot of setups. There's a lot of setups on the trend change to the upside. And take that a step further, that's where we are in the market right now. Whether we want to just look at candlesticks on the spiders chart, we can also dig in a little deeper and get some interesting underlying feedback under the surface of the water and see that these long side trades are not really working. There are many more to choose from, I should say, than the downside. So we can do the same thing. This is a directional trade, the horseshoe up. Well, what's not working right now is the inverse, the horseshoe down, because trust me, I back tested it. But at some point, it's going to start working again. And when it does, here's how you can create it. You basically just take what you've got with the horseshoe, and this will be your homework assignment, everybody. I'm not going to do it for you. Basically duplicate it. So we got two windows. Take your duplicated window and go to Configure, hit the flip button, and Trade Ideas inverts everything for you except for the volume filters. Those remain constant. All of a sudden, we've got an upside down horseshoe, which is the exact opposite. And we've given this a couple different names, the sad frown or maybe the rainbow of death. But right now, these are not working as well. Let's just quickly backtest this strategy. Go ahead and just sell it and see what's going. Yeah, like I can tell right off the bat, the thumbnail is telling me this is not going anywhere. At some point, this strategy may be a viable strategy when we get into a more sellers type of market. But right now, it's not. So I'm not even going to finish this. I can just tell that's going to be crap. Let's just save the time. So going forward, just remember that you can take any directional alert and flip it upside down to your advantage. All right, let's close that because I don't want that right now. And let's see if we can mark up a few charts. Amit, when you optimize an alert and modify it while backtesting, will the alert be updated with the new settings going forward? Yes, because if I had changed one of the settings having to do with price or having to do with volume filters, any of those things, and optimizing it, every time you run that new optimization, you basically saved it into your current settings. So the answer is yes. All right, let's mark up some charts. I've had a couple that I liked to start with. I'll save you going through a bunch of them. I've got one program, one top list. I've got bearish engulfing and bullish engulfing. I've already gone through these. Not a whole lot of bullish engulfings. They're basically stocks that are down at least 3 days and trying to turn back up. Nothing really there. But the inverse, and again, I created this by basically taking this and inverting it. And I'm seeing a lot of things that have had some good run lately, but might be ready for a reversal. CN is the one that I like. Okay. Again, we've got a giant gap. 1, 2, 3, 4 solid days of green bar, and then a very narrow spinning top, and the red candle body is what I like to see. So what I'm going to do on this one is I'm going to set this for a short just below the low of that day, which is 2164. So let's go 2163. We'll get close. Right there. Got it. Nailed it. And it is a short. And I got this off the bearish. I cannot type. Bearish engulfing. So I know if it comes to me in real time, oh yes, yeah, bearish engulfing, that's right. I can decide if I want to take that trade. All right, so the line is in, the line is red, which means it's waiting, it has not been triggered. That line will turn to green when it does trigger. But of all the ones I've gone through today on this entire list, I felt like this one was the best one to share with you guys. So beyond that, I don't really have anything else set, except I just want to go through some of the trend change lubricants, which usually spit out some interesting ideas, and see if we can find something. I have sorted this by short float percentage, so the ones that are at the top have the biggest opportunity to be having a short squeeze. This one was in kind of a no man's land. I set this as an example earlier today for somebody I might be interested at this point, but that could be weeks or days or weeks away, who knows. Let's go to the next one, AMBA. Well, wouldn't you know it? This was one that was talked about today, but it already had its run. It basically was missed. So rather than chase it, I have put a pullback alert here at the tip of that level, and that's a working alert. But let's just go through here, and Andy, of course, stop me if you see anything that you like, because I'm just going to try and go through some of these quickly.
Okay.
Got that. I'm going to zoom out just a little bit more so we can get a bigger picture. Here we go. Probably like that. All right. Yeah, that's just in its channel. Nothing really there. Nothing really there. Still in its channel, just back and forth, lower lows and lower lows. Nothing going on there. I want to see something that's trying to make higher lows. Well, again, AMBA, we just had a hiccup and went back up to that. I don't know why it did that. Autodesk. Autodesk could be interesting if it got to this point. Let's go ahead and just set this for the sake of doing it. Sure. Ideally, I'd like to see this maybe sideways, slowly creep up. I don't want to see it expend all of its energy getting to this level, but this would be a technical level for the 21% short float to start getting nervous about if it got above that particular level. So we'll go ahead and do that. Trend change lubricant, and remind myself it's 21% short the float, so when this alert comes up, I know exactly what's going on. All right. Yes, before I forget, I will share. I don't want to walk away without sharing some of the things that people want. So here is the bearish engulfing in the chat window now. Here's the bullish engulfing. No, matter of fact, I'm going to make you guys do it yourself. Homework time. Bullish engulfing. Take the bearish, duplicate it, configure, right-click, and flip it, and you're going to have your own copy of the bullish engulfing. Got to have you guys get some skin in the game. All right, so this one has been set. All right, let's move on. MOH.
Can I ask you something about that? I mean, looking at that Sienna, if I'm just curious why you call it actually engulfing. I just don't want to misrepresent what an engulfing.
What an engulfing is. I'm calling it engulfing because the body of the candle is coming back across through the body of the prior candle. So technically, an engulfing would be at the bottom of this candle, right, Andy? Is that what you're saying?
Right. Yeah.
Well,
yeah.
I'm trying to get an early start. I'm trying to get a head start.
I understand.
Yeah.
That has a lot has a lot of potential there.
Trust me, I went through all of them.
Yeah.
Here's an example of why I don't like this one. Look at that wick. It tried to pull back, but the buyer stepped back in and pushed the wick back up. That trade is now broken to the downside. So, Andy's hitting me on a technicality. The definition engulfing may not necessarily meet this, but what it's doing is it's stopping the bleeding of the green upside and putting in a red candle and trying to show a possible reversal. All right. Back to our our limit alerts here. Oh, Beezer Homes. What's that looking like? Yeah. If it was closer to this level, I'd be interested. Nothing really there. Nothing really there. This was one that was actually set earlier and triggered, not taken, but triggered, so this one's actually working. Nothing really going on there. This one could be interesting if it clears this level. We've got this void that Barry talks a lot about. So let's go ahead and set this one as well. We got a high of 1634. We'll just go 1635, and I can adjust that on the fly. This one is 15%. So we're starting to run down the line here of the short float. Basically, the 15% short the float cutoff is kind of my level of where it no longer really makes any difference. Well, but when you get up into the 20s and 30s, that's a different story. Let's take a look here if we see anything more interesting. This is kind of interesting. I like this. It's basically stopping right here because it closed its gap. But if it can go through that gap, I'd like to know about it. So let's go ahead and set an alert at 570. Right click, uptick it to 70 so I don't trigger it. And again, this one is a trend change lubricant window where I found it, and it's only 14%. So again, we're starting to hit the bottom barrel here of possible short squeezes. LNG, it's always a fun name. Well, this thing can really move LNG, and I can identify an interesting level here. Resistance there, resistance here. Maybe this one takes a week to develop, but let's go ahead and set this one as well. The high is 39.75. Let's go 39.76. 39.76, and this was also a trend change lubricant with 13% short the float. And we're getting close to the bottom of the hour where we'll bring Scott in. Let's just find one more of interest, and then I'll share. Oop, there it is. There it is. I love these charts. A lot of upside void here to fill, and this is what I really love: a nice movement, and then a consolidation over time. 1, 2, 3, and even consider today a fourth day of sideways consolidation. This is probably the nicest looking chart that we've marked up here this evening. So we're going to end on this one. The high of this is 56.27. The high of this is 56.29. So we're going to have to go 56.30.
Pull up the intraday. I'd like to know when it tickled that high.
Sure.
Yeah.
The intraday is right here.
Okay, so it's pretty much on the close there.
Pretty much on the close, yeah. So this one,
I like that better than doing it in the morning and failing. Yeah, but
I would not be surprised, guys. I'm going to share these alerts right now, and then we're going to say hi to Scott and talk about some discount codes to get you in here. But this I would not be surprised if this one goes off immediately tomorrow in the first one. How do I interpret the short float? Real quickly here, to answer your question, Gishan, it's this column right here. And as you can see, we can sort by any column. I could sort by relative volume, but in this case, I'm looking for short squeezes. So I am going to be sorting by the short float percentage, which is a Trade Ideas filter. So let me just go ahead and, if you want to talk, Andy, go for it while I do this.
You know,
the data, I believe some of it's Yahoo, some of it's, shoot, I wish Brad was here to tell me. Some of it's Yahoo, some of it is, no, it's not FinViz, it's another one. Oh, God, it's right on the tip of my tongue. Sorry, I can't answer that.
No problem.
So here's what we'll do. We'll double-click Created, 6, 8, and these are our timelines. So these are the ones that were set by us this evening. I'm going to right-click and share these selected price alerts. So for those of you who are waiting for some price alerts here set in real time, I am dropping that cloud code right into the chat window, and all you have to do is file load from cloud, and once you load that, those will populate directly into your price alerts. And Lee, yes, please check the chat window. The horseshoe alert was dropped in there as well. The hour goes by quick, guys. Love this program. Andy and I have been using it forever. I love hearing the great feedback that we hear. Keep it coming. With that said, I'm going to let Scott come in and finish off and let you guys know.
Unmuted.
Finish up some cool coupon codes.
Okay, sounds good. Go ahead and pull that slide up. Yeah, thanks everyone for joining us today. And something we'd like to do to thank everyone for attending is give out a discount code. Now you can go to tradeideas.com/price and click through either of our Pro or Premium offerings and use trade of week on checkout for 15% instant savings on your first month, first year. So Trade Ideas, we used to sell the Odds Maker and AI as a one-time license fee for lifetime, and we're doing that for a long time, and we decided to simplify this and make it easier. So now you can try TI Premium for just $188 per month before upgrading to the $1888 per year. Both these are no contract. They're automatically recurring. It's just year to year or month to month. Or if you're not quite ready for that, for the AI, or perhaps it doesn't even suit your style, although I don't know why you wouldn't be interested in having it, you can get regular TI Pro at $99 a month or $888 per year. Obviously, the yearly on both of those saves you a bundle. And with that 15% off at checkout, that's quite a bit of savings right there. So you can get this page also from that handouts panel in your GoToWebinar interface. Go ahead and click on that, download the PDF. You got the link right there, and all that you need to do that. It also includes some good contact information. And you can follow Steve and Dan on Twitter, and you can also you can probably change the slide to the contact page and reach out to us at info@trade-ideas.com or steve@trade-ideas.com or andy@trade-ideas.com or Scott at, I think you get the idea. Steve is Today Trader on Twitter, and Dan is Trade Ideas 1. So those are two people you're going to want to follow so that you can kind of keep up with everything we're doing. And the Facebook page, we're Trade Ideas Pro on Facebook. And we sometimes post some special things there that are different than our normal communications by email or during the webinars and trading room. I hope everyone does attend the trading room tomorrow. Go there. We had a lot of people in the room today. We were anticipating a lot tomorrow, and they're always a good crowd, always lots of interesting stuff. The session's recorded. It should be up late tonight or tomorrow morning. You'll get an email if you registered with a link to that and a reminder about that product code. And I want to thank Steve and Andy for the great presentation tonight. Any questions? Send it to info@trade-ideas.com is the best place. Thanks, Steve. Thanks, Andy.
All right. Thanks, Scott. Appreciate it.
See you next time.
Yeah, good
Thanks,
night.
everybody.